The S&P 500 is up nearly 12% this year on strong earnings and signs inflation may be falling, but will that continue? Welcome to Market Insight. I'm Anna Geary. Stocks ticked higher Friday as traders headed toward the end of a choppy week. We've had blockbuster earnings from Nvidia, with the AI bellwether exceeding Wall Street's sky-high forecast for Q1. That's lifted sentiment, but otherwise it's been a mixed picture of consumer earnings from huge brands like Walmart, Starbucks and McDonald's. Well, joining me to analyse this is Keith Gangl, Portfolio Manager for Gradient Investments LLC. Keith, all eyes have been on Nvidia this week. As well as massive earnings, the chip giant raised its guidance. But can it sustain this growth?
Yeah, we think it can. Obviously, we don't think it's going to sustain what it's done last year's 100% growth in earnings. This year is actually supposed to grow 100% as well. And you start looking a little farther, it's supposed to be more like 35%. We think that is sustainable. They're the market leader here right now. They own 80% market share. They have 75% gross margin. So for right now, we like this name a lot. And when we start seeing gross margins tick down a little bit, that may be a sign that their competitors are catching up to them. But they're so far ahead of everybody else right now. We think it's a good investment.
Do you think, though, it's becoming too big for the industry? I mean, where does it leave others in the sector? Can they compete?
Yeah, everybody else is playing catch up, so it's nice to be the leader. And we think they have a year plus lead, and I think that's going to be maintained for a while. But at some point in time, people will look for cheaper alternatives. Everybody's investing in AI right now. That's what's driving their big EPS upside. We're seeing all the big guys, whether it's Microsoft or Google or Alphabet and Meta, even Tesla was called out here on the Nvidia call. They're all investing in AI, and they are the leader right now. So that's why we think Nvidia is in the pole position. That's why the stock's done so well, and it continues to drive the overall U.S. market as well.
Now, turning away from Nvidia, what other stocks will you be watching and why?
Like you mentioned at the top of the show, it's certainly consumers. I mean, the consumers drive the overall GDP in the U.S. They make up about 2/3 or about 67% of the GDP growth rate. And right now we're seeing a little bit of mixed signals. Last year they're very strong. Now we're starting to see a little bit of caution, but they're still growing. Some of the big names that you mentioned is Walmart had a fantastic quarter, and one of its direct competitors is actually Target. Their number wasn't nearly as good. Walmart did a 3% comp, and Target did more, minus 3%. So part of the difference there is Walmart's a lot more geared towards, food, which is 60% of their market share or their revenues, whereas Target's only 20%. And Target actually announced that they're going to do 5,000 of their SKUs are going to get price discount. And the reason they're going to do that is because they were priced a little bit higher than Walmart. So we think that'll get them back into the game. Target on this pullback is a name we like a lot here. Some other signs that we're seeing, Chipotle was, a high-end, retail, a restaurant that's, a little higher price. That's done fantastically well. On the other end of the spectrum, we have McDonald's. They've been a little bit softer. Their quarter wasn't that great. Starbucks wasn't as great. So definitely mixed signals right now in the consumer. So we're really watching that space a lot.
Where do you think then it leaves the consumer with this mixed picture?
We think they're still spending, and they like to spend. They may be spending a little bit more on like services and travel and leisure. Starting to see some really strong numbers. So a lot of the travel, especially the cruise lines, we saw some numbers come out this morning that were strong from Norwegian. So they are spending, and again, they're spending on certain things. They're spending on Chipotle a little less than McDonald's. They're spending on Walmart a little less at Target. So they are spending. And the other thing we look at is unemployment here in the U.S. is strong. It's at 3.8%. So that's very healthy. And the actual wage increase is actually above like about 4.5%. Inflation here is around 3.4. So when you have wage inflation above overall rate of inflation, that's still a very good sign for the overall consumer.
Now, this afternoon, we've also seen new data suggesting orders for key US manufactured capital goods rebounded more than expected in April. Shipments of these goods also increased. So that's suggesting a pickup in business spending on equipment early in Q2. But we have seen investment hampered by Fed policy tightening. So how much do you think this uncertainty on the rate path is weighing on firms and investors? And what do you think the Fed will do? When might we see that cut?
Yeah, that's the big driver of the overall market last year, what the Fed was going to do. We came into this year, the expectation for the overall market was for 6 to 7 cuts. We were more in that maybe 2 cuts, and that's actually where the market's come down to now. There were expectations, the consensus expectations around 2 cuts. And if you back it up just a month ago, we went from, the data, like you mentioned, was getting a little hotter than expected, which means that the fact that economy stronger. And so if the economy is stronger, inflation could tick back up, and the Fed doesn't want that to happen. There was actually, some speculation that the Fed will actually start increasing rates. We certainly don't think that's going to happen. But on the other side, we do not think that they're going to cut. Some people are still at three times this year. We don't think that's going to happen. We're at maybe one, maybe even zero. If the economy stays strong, like all the numbers we just talked about, we don't see a need for the Fed to cut. So we're keeping a close eye on all these numbers that are coming out. They've been better than expected. Consumers still spending. We don't necessarily need a cut. The stock market in general likes cuts, so they got to temper their enthusiasm as well. But one of the key drivers for the overall market this week's been Nvidia. They're moving the market higher.
Keith, thank you so much for your insight this afternoon. Really interesting. And that is your market insight. You can watch more videos on Reuters.com.